temporary measure and it will be reviewed on 8th September or earlier. We will ensure, as we have said, that there is adequate liquidity available in the system to meet the credit needs of the economy. We have done our internal assessment. If you recall, I paused during the statement and I said that we have done our internal assessment, and our assessment show that there will still be adequate liquidity left with the banking system to undertake maintain their lending activities which they have been doing. And let me also add that we are sensitive to the cash requirements ahead of the festival season, which should be kicking in, let's say, in the latter part of September or early October. On the liquidity situation, let me add that there are at times pressures on liquidity due to overall there is surplus because of, particularly because of the withdrawal of 2,000 rupee banknotes, with 87% of it coming as bank deposits. So obviously there is a, there is a liquidity overhang, there is a liquidity excess that had to be dealt with. But even with that, there are periods when, as we have seen in the past, and as we may see even in the coming months, that there could be pressures on liquidity, especially in situations or at times when liquidity held in the system goes into the government coffers at the time of the tax payments. And this happens particularly around the time when advance tax payments are made with regard to direct taxes, or 20th of every month when the GST inflows also happen. But we have seen in the past that, but after a few days, it returns to the system because the government expenditure, ensures that the money comes back into the system. So there are temporary pressure times on the liquidity situation, which lasts for about maximum 3 to 4 days, and not beyond that, sometimes maybe 5 days, but it goes back into the system. And so this was on the ICC, on the incremental CRR and on the liquidity situation, what I wanted to say. This was the third point. The fourth point is the financial stability, the financial sector stability is well maintained. Stability is a public good, and market participants and financial institutions have an equal share in preserving financial stability. We from the RBI look forward to their cooperation in this regard. The final point, the fifth point, is that the external sector is also resilient. Forex buffers are strong. The umbrella has gained further strength, and that gives a lot of confidence and comfort to the market. I'll stop here. Thank you.
Thank you, sir, for those opening remarks. I'll invite Mr. Mayur Shetty from the Times of India to ask his question.
Thank you, Yogesh. Governor, you had announced some measures on UPI allowing tap and pay and conversational payments. Also, since the last policy, there have been some bilateral agreements signed between RBI and other governments for integration of domestic payment systems and rupee invoicing. So when will users actually get to see this on the ground happening?
No, with regard to UPI linkage, we have already done it for Singapore. And so far as the RuPay card is concerned, it is already in, it is used in a few other countries, you are aware. Recently, we have signed an MOU with the UAE, whereby we are going to link our UPI with their PPI system. They call it PPI. That is work in progress, and it will happen in the coming months. And discussions are underway with a few other countries also for linkage of the payment systems, and including some advanced economies who have evinced interest in linking to UPI. The UPI has now become internationally recognized as it is recognized by others. I am not saying it myself, but it is recognized very widely that it is perhaps the most efficient and advanced payment system in the world. And this is something which I am saying on the basis of our G20 meetings, the finance ministers and governors meeting, which was held recently and even earlier. So this is work in progress. We are already in discussion with a few other countries, and it will happen.
Thank you, sir, for that answer. I'll invite Anushka Kayastha from the Hindu Business Line to ask a question.
Good afternoon, sir. So I wanted to understand the
Just
RBI
one correction. I think the UAE system is called IPP. I said PPI. It is IPP. Thanks.
So the
Integrated Payment Platform. That is the, yeah.
the statement said that the RBI will review the reset of floating rate loans due to unreasonable elongation. I wanted to understand, how do you define unreasonable elongation given the 250 bips rate hike by the central bank so far?
I would request Deputy Governor Rajeshwar Rao to take that question.
No, I think we are not considering defining an unreasonable elongation. It's something which the board will have to consider, having regard to the the tenor and the repayment capacity of the individual borrowers. It is up to the board to decide what is a reasonable tenure, and increasing that beyond a particular period would be deemed as unreasonable. But it is left to the individual institution to define it. We will not be
As per them, as in the elongation, it would be because they are floating rate, is market linked. So how do you then, what are the parameters that you look at?
We have already discussed this with the CEOs of the banks, and we have conveyed our concerns and what action we expect them to take. I think we will stop it with that. Don't think we'll like to close.
You see, if I may add, this is something which, as the Deputy Governor is pointing it out, this is something which the banks will have to assess, taking into account the payment capacity of the borrower and how long his payment capacity is lasting. It is something which he has to also, the banks have to take into account, take into consideration the age factor. You know, it will vary from individual to individual, the age factor, the payment capacity. And also it is necessary that, to avoid unduly long elongation, which sometimes may, going forward, camouflage and underlying stress in a particular loan. So therefore, the extension of tenor has to be for a reasonable period. We don't want to define it. It is something, it's a commercial decision of the banks, which the banks, as the Deputy Governor has pointed out, the banks and their boards will have to assess and a decision. It's a commercial decision which the banks have to take. We are just providing some broad guidelines.
It will be on a case-to-case basis then.
You wait for the circular.
Okay.
You wait for the circular.
Thank you, sirs. अब मैं आमंत्रित करूंगा स्वाति खंडेलवाल from Z Business News.
थैंक यू योगेश, थैंक यू गवर्नर. आपने कहा अपने स्टेटमेंट में कि बैलेंस शीट्स कंपनीज की बहुत स्ट्रांग है, रोबस्ट है, इंडिया एक रेजिलिएंट इकोनॉमी की तरह उभर के आ रहा है. प्राइवेट कैपेक्स अभी भी कंसर्न है जब हम बात करते हैं. इसको कैसे आप एड्रेस करेंगे और क्यों ये नहीं अभी तक हो पा रहा है, इसकी कितनी चिंता है आरबीआई को?
इसी जैसे कि लास्ट फाइनेंशियल स्टेबिलिटी रिपोर्ट के फॉरवर्ड में मैंने लिखा था कि ये जो सिचुएशन है इसमें एट द मोमेंट देयर इज अ ट्विन बैलेंस शीट एडवांटेज. द बैलेंस शीट, बैंकों के बैलेंस शीट और कॉर्पोरेट्स के बैलेंस शीट दोनों स्ट्रांग है. सो इस समय पर और बैंक के जो मतलब जो कॉर्पोरेट बैलेंस शीट है वो भी काफी डीलेवरेज्ड है. तो इन्वेस्टमेंट के लिए उनमें काफी फैसिलिटी, देयर इज स्पेस फॉर मेकिंग इन्वेस्टमेंट. बाकी तो ये इंडिविजुअल कंपनीज के ऊपर डिपेंड करते हैं. बट मैंने स्टेटमेंट में बहुत क्लियरली कहा कि इन्वेस्टमेंट, जो प्राइवेट इन्वेस्टमेंट है, अभी वो सिलेक्ट क्रिटिकल सेक्टर में, सम की सेक्टर्स में इट इज हैपनिंग. और मैंने फुटनोट में स्पेल आउट किया है कौन सा सेक्टर में वो इन्वेस्टमेंट अभी हो रहा है. की सेक्टर्स जिसमें कि मैं कह सकता हूं कि आयरन एंड स्टील हो, ऑटोमोबाइल्स हो, पेट्रोलियम सेक्टर हो और मेटल्स में है, केमिकल्स सेक्टर में. So काफी सेक्टर में, की सेक्टर में अभी इन्वेस्टमेंट it's happening. So therefore going forward it should happen in other sectors क्योंकि the ground conditions are favorable for investment.
Thank you, Governor.
Dhanyawad, sir. Now I'll move on to Lata Venkatesh from CNBC TV18.
Thank you, Yogesh. So, a couple of questions on the CRR. Can you tell us exactly how much more CRR will have to be maintained? I'm getting calculations from 95,000 crore to 1 trillion to even 1.1 trillion. What exactly is the extra? Some part of the extra...
You are not very much off the mark with regard to that calculation which you mentioned.
But 95
you are
1.1 is 15,000 crores, sir.
So you are not very much off the mark, but I'll reply to your question.
Sure.
Yeah.
And some part of the increase in July 19 is because HDFC got merged. Now, your purpose is to actually remove the 2,000 crore rupee, related liquidity. So, will you adjust for the HDFC related increase? And will the calculation be net of that? And the other point is, when you say 10%, you have to pay a base 4.5 plus 10%, right? That 10% doesn't include the 4.5. So, the increase is a net 5.5. How should you calculate?
No, we have done the internal calculation. We have done a bank-wise calculation also, and it will be a little above 1 lakh crore. Let me mention it that way. We have an exact number in our mind, but I don't want to say it because this NDTL figure calculation, it requires further fine-tuning, but it will be a little higher than 1 lakh crore. And it's applicable, this incremental CRR is applicable to all scheduled banks. That will include,
So you're not
all
netting
scheduled
HDFC,
banks.
right?
And no, it is applicable to all banks. I cannot say X and X is included or not included, but it is applicable to all scheduled banks.
Okay. No, now, just to add, even though the extra liquidity, surplus, sustainable or endurable liquidity is, what's the word you use, is 3.5 trillion, the weighted average call rate is behaving itself. It's almost always hugging the repo rate. So what is your comfort figure? The banks complain that they also have to keep excess liquidity because of NEFT. So what is your discomfort figure? And weighted average call rate is behaving itself. It's almost always hugging the repo rate. So what is your comfort figure? The banks complain that they also have to keep excess liquidity because of NEFT. So what is your discomfort figure? And separately, what will you consider when you tweak it on September 8th, separately, the CRR? Will you remove it on September 8th? If not, what will you consider?
No, September 8 will depend on the situation prevailing at that time. In between, so many things are there. The GST payments will happen. The government expenditures will happen. We have to watch the credit offtake from the banking sector also. So I cannot prejudge what we will do on September 8. But yes, we will review it on September 8 or even earlier. That is what I have mentioned. As regards the liquidity, it's a very dynamic number. You cannot say that this is the level of liquidity I want to take it out because it is a dynamic figure. It will depend on so many factors. It will depend on what is your growth rate. It will depend on what is your inflation number. So it's a dynamic figure, and it's not possible and not desirable also to give a particular number because it undergoes constant change. We are always nimble in our liquidity actions. You would have seen in the past, we have the main operation of 14-day VRRR. As and when required, we have undertaken fine-tuning VRRR operations. As and when required, we have also undertaken fine-tuning repo operations, but whereby repo has been injected. So we monitor this situation constantly, and there have been two-way interventions which we have done in the past. We are very nimble, and so far as the level of liquidity, it's a dynamic figure. I would not like to venture into giving a particular number.
There's nothing like a comfort neutral factor.
I think we'll discuss on the offline mode. But it's a dynamic figure. You cannot really say that this is a comfortable figure. Yeah.
Thank you, sir. We'll move on to this side of the room now. I'll invite Mr. Manojit Saha from Business Standard to ask his question.
Good afternoon, sir. Despite your repeated assertions, the actual inflation and the 4% is still very far. Are you getting anxious about it? And when we are going to act on it before, how long you are going to wait before getting act on it?
I think I will I'll request DG Michael Patra to take that question.
So if you recall, in May, the inflation rate actually aligned with the target. And 4.3 is a comfortable level of the inflation rate. But then these food shocks came, which are unpredictable, and their period of stay is also unpredictable. We hope that these are transitory phenomena, and they will come off when supplies improve, and they are improving already. So that's the feeling. It's just that there have been these food shocks which were unanticipated, and we will see them off.
So barring the food shocks, the inflation would have been aligned with that was your expectation?
Thank you, sirs. I'll move on to Mr. Piyush Shukla from the Financial Express.
Good afternoon, Governor. Firstly, wanted to check on when should we expect the final ECL norms to kick in? And secondly, sir, in the last MPC, former DG Jain had said that we will be issuing a fraud classification circular soon. Is there any update on that front? Thank you.
On the ECL part, I would request DG Rajeshwar Rao to reply. And on the fraud classification, I would request DG Swaminathan to reply.
The ECL circular, as we have said, there have been several inputs which have come in. Some are technical issues which need to be examined. So it will take some more time before the measures are rolled out. So I think I can't give a definite timeline at this point, but it will take some more time to finalize the measures.
Yeah. On the master direction on fraud identification and reporting, the circular is under works, and we are doing a wider stakeholder consultation, government, vigilance, law enforcement. There are the other stakeholders with whom we are under consultation at this point in time, and we would be coming out with these guidelines very shortly.
Thank you, sirs. Now I'll move on to Mr. Anup Roy from the Bloomberg.
Thank you, sir. Sir, is Russia investing in Indian government bonds and T-bills, and how much that could be? How much the investment could have been by now, and is there any liquidity implication for